We're watching the housing market, certainly one of the big focal points in this week's economic data. Let's find out what investors have learned and whether or not the optimism we've seen in this group can continue. Jason Haber, broker over at Warburg Realty, and Rogers Healy, owner and CEO of Healy Global Relocation, both with us. Jason, I'll start with you. Obviously, we've heard so much optimism about housing, and even Lennar gave its numbers and talked about new orders for 2021. What's going on here? How come it's continuing, and will it continue, do you think?
Well, yeah, I think it will continue. You know, just as housing led us into the abyss in 2009, seeing now it's helping lead us out of the economic abyss. And Lennar is a great example. That's a stock that's up 38% year to date. They're loaded with future forward-looking business, and they're not the only home builder that has a positive forward outlook as well. Toll Brothers does. Even the suppliers like Home Depot are showing a lot of strength right now. And so what you're seeing is not just has the market performed well, but there's an expectation that going into the spring market, that across the country we're going to see a very active market, both in resale and in the new home sales market.
Right. Rogers, tell me what you think. I mean, so many people, the obvious is people ran from the cities and they were buying houses, right? So that was like the first real wave of this mass, fast home buying. And prices were so high and nobody cared. They were battling each other. But how can that possibly continue? I mean, didn't everybody who wanted a house get one already?
Yes and no. And I think to kind of play off what Jason said, I mean, it has been a different kind of rush, right? And I think that ironically, the gold rush of California, there's a big rush out of California. And so whenever stuff like that happens, places like North Texas, where we're based, we just have a different influx of business. And on top of that as well, the thing that became cool this year was the suburbs. People want to live in the suburbs because they're going to go and have more land, more space for a lower price, because also their commute to work isn't like what it used to be, because a lot of them are working downstairs or maybe upstairs. So, you know, we've seen an incredible increase in people building houses, an incredible increase in the amount of demand for labor, and an incredible increase for the amount of demand for the supplies. So yeah, we've had a great run in real estate, and I think we're all poised for a good few years coming up.
The home builders, guys, Jason, your thoughts on some of the home builders, some of these publicly traded names. Are some better positioned than others, or as a group, do you think they will continue to do well?
Yeah, so I think you want to look at what markets they're active in. One of the biggest constraints right now on the new home sales market is supply. And that's where the home builders come in, and that's why their forward business looks so strong. So I think a lot of the bigger publicly traded companies are showing growth. By the way, I mean, we're seeing this across the board. Just this past week, we had one real estate builder go public via a SPAC, which I think is another trend that we're going to see continuing into 2021 as more real estate entities get into the SPAC market. It's just a sign that there's a lot of investor optimism in what's happening in the housing market right now. And I know everyone's talking about the suburban market, but I'm also here to tell you that New York City and other cities will be back, and they'll be back surprisingly faster than most people think.
That was my next question, so I'll let you expand on that thought, Jason, because
Sure.
I was going to turn to Rogers, and I want to get your thought too, Rogers, on this, but I'm right in the heart of New York City. Met a couple this morning that paid over $2 million for a pretty small apartment right before COVID. They're having a heart attack. But when does everything come back? Because we see these buildings, they're at 10% occupancy, maybe, corporate buildings.
So what's going to happen is the city's in transition, and there's no doubt about that. Once we get through this tunnel, and there's a light at the end of it, we just all have to be smart and get there. There is an exciting moment, I think, of regeneration that'll take place in the city. You're already seeing it on the streetscape now with the outdoor dining and all the sheds that have been built and how interesting the streetscape looks. And I think you're going to see, we've had this sort of period of creative destruction. There are folks that have left, there's no doubt about it. I'm already starting to see people come back and people looking to buy where there's value. And that's how this comes back. It will be a different city. I think in many ways a better city, a more sustainable city, and a more affordable one too. And that's all good for the future.
Right. Rogers, let me get your thought on this, because one trend I've also seen is that millennials, as Jason's saying, some people are coming back. Some of the millennials are coming back because they're seeing rents at lower rates. And so people who wanted to live in New York City maybe originally and thought it was too pricey are getting the chance to do so. When you think about real estate, commercial real estate, cities, and some of these REITs, what says, yeah, that's a winner? Rogers?
Yeah, I mean, again, to play off what Jason said, you think about the cities that are not historically the kind of cities you go to save money, you go there to spend money. So it's the Chicago, the DCs, the Miami, and the Manhattans. And I think what we're going to see is the definition of a good deal for people like Jason and myself, where, in Manhattan, the good deal might have been the deal that you got. Now the good deal is a deal that you're going to get that's at maybe 80% of the price that you would have seen a year ago. So it's all relative. And I think that they're going to see an influx of people moving there to where, people right out of college, there's always going to be the allure of moving to the shiny, bright lights of LA, New York, Chicago, Miami, et cetera. So I do think there's going to be a big surge in cities like that. But with that being said, the one thing in real estate you can't build is land. And so these home builders that he made reference to that are having their stocks, increase year over year, day over day, month over month, they're going to continue to flock to places that historically haven't been a bullseye city. So I think that it'll be an interesting dynamic these next few years where the junior versions of these cities like New York, et cetera, are going to continue to do this with millennials, but also with people that just, want more land and want something that's more affordable. So I think we're really poised for a great real estate market in New York. Obviously, it's New York City. There's nothing better ever. You guys are going to be great, but it just might take a little bit of time for people to readjust. But that's part of seasonality of real estate in itself.
Right.
Rogers, give me a few seconds on the rates. Oh, I'll give you a few seconds too, Jason. Just a few seconds on the low rate environment. Quickly, yeah. Rogers.
Yeah, I mean, it creates buyers out of thin air. That's the short answer. People can go get a good deal. They're going to rethink what they thought was important to them. A lot of the people that we've sold properties to in Dallas, Fort Worth, and across the country, across the world, weren't people that thought about buying prior to COVID and also prior to interest rates being at a historic low for months and months on end. So, yeah, right. I think it's been a great motivator across the board.
Yeah. Jason, final thought, a few seconds. Go ahead.
I think it's a really important story because a lot of the conversation today has been on cryptocurrencies and the new highs that they're getting. But unlike crypto, you can't live in a Bitcoin, but you can live in your investment in your property. You can't even live in a server farm in a Bitcoin. It's too cold. But you can live in your home and reap the benefits of it, too.
And for the most part, when you buy something in 10, 20 years, it's definitely higher. I don't know about Bitcoin. I don't know because I haven't seen it for 20 years. So we'll see. Jason Haber and Rogers Healy, thank you both. Jason Haber of Warburg Realty, Rogers Healy of Healy Global Relocation.